Inox Leisure has reported its highest yearly revenue of 1,692 crores for FY19. In Q4 particularly, popular releases in February and March helped the multiplex operator post a 47% revenue growth. Is the growth sustainable? Let's put that question to the CEO, Mr. Alok Tandon, who joins in on the show right now. Mr. Tandon, thanks very much for taking out the time. Put the quarter gone by into perspective for us and highlight what were the key variables that you were watching out for in the quarter.
Thank you for having me on the show, and just to tell you that we have had a stellar FY19. We've got some great numbers, and over and above, we have created some records where Inox is concerned and also where the industry is concerned. We have had the highest footfalls for Inox till date, which is 6.25 crores. We've got the highest average ticket price, which is about 197 rupees. We have got 74 rupees as SPH. We have opened 85 screens in the last financial year, and which is about opening one screen every 4 days. And so that's been quite a performance for us in the last financial year. Going forward, our endeavor is to continue with that and to see that our EBITDA, which was 309 crores in FY19, a growth of about 47 to 50% compared to the last financial year, and our PAT, which was at about 129 crores, which is a 112% jump from the last FY18 numbers. Our endeavor is that, yes, where the operational metrics are concerned, to push the pedal hard and continue with good numbers.
Sure. Mr. Tandon, just comment a little bit more on the exhibition expenses. Sequentially, though, it has seen an uptick. Could you throw some more light on that?
Well, it all depends that how it is. For example, rents will be slightly high because it was a great quarter for us, and there are some properties where we have revenue sharing with our landlords. So that could be a part of it. We had more guests coming in, and hence the AC ran for a longer time, and hence could be a slight increase where HLP or the power consumption is concerned. But otherwise, we are not perturbed about these numbers. We feel that they've grown as per inflation, and we are on track where the costs are there and the cost control process which is in place.
What about the contribution to the margins? Because they seem to have expanded to about 20% from 12%, and that's a big expansion.
Well, if I'm talking about EBITDA margin, yes, it went up by 20% in Q4 FY19. But overall, the entire year, it was about 18% EBITDA margin. And similarly, where PAT is concerned, we had a 9% PAT margin in this financial year compared to the last one. And overall, our margins have gone up, our footfalls have increased, our occupancies have gone up from 26 to 28%, and in every possible parameter, we've shown a growth.
Would you maintain these margin levels, Mr. Tandon?
Well, our endeavor is that whatever margin we show, that we have to ensure that we keep on doing well quarter on quarter. It'll be very difficult for me to say whether it'll be able to continue or not. But as I said, our efforts are there. The entire team is focused on getting good numbers, whether it's footfalls, whether it's occupancy, the average ticket price, or the spend per head where food is concerned. So the efforts are there to ensure that the margins are good quarter on quarter.
Sure, but operationally, is there going to be a focus? Will you remain focused on a particular variable to maintain the 20% margin?
Well, I'm not saying that our endeavor is to maintain 20%. I'm just saying that we have to maintain great margins. So don't hold me to a number. But yes, there are lots of triggers. Number one, to ensure that people come in. We decouch them from their homes and make them come to our theatres to watch movies in different formats which we have, whether it's an IMAX, MX40, Insignia, Kiddles, or even a normal theatres. They should come. The other thing is to ensure that the food which they eat is something which we keep on changing our menu. We are curating new menus month on month, so that menu fatigue does not comes in. We are ensuring that point of sales are increased, and as I said earlier also, that we want that every patron where he's standing should have a point of sale in his pocket, which is an app in his phone, whether to buy food or buy tickets. We are doing a lot of work to ensure that things keep on improving, even where advertising is concerned. The go-to-the-market rigor, the approach which is there, how to handle media managers, how to ensure that something new on screen, something new in the lobby, new innovation. So all those things we are looking at. And yes, cost control is very important, whether it's a reduction of power units by having energy conservation measures being adopted or something else. The focus is there also.
Footfalls this year have been great. In Q1, we'll see the impact of the Avengers movie. But is the rest of the pipeline strong enough to make sure that the footfalls remain steady or see a substantial increase?
Yes, Avengers had some great footfalls. We had some great footfalls in Q1 of this financial year. And we've got some good movies which are knocking on our doors. And whether it's Bharat coming in, or it's Aladdin, which we are looking at, or any other movie this quarter, I'm hopeful that it'll do well. And also we've got a great slate for the entire financial year, be it Mental Haikya or Brahmastra. There are various movies. There's an untitled movie by Tiger Shroff and Hrithik Roshan. So I'm quite excited about this FY20 lineup also.
All right, could you talk about the growth potential in the food and beverage segment along with the ad revenues as well?
Yeah, well, I would not like to talk about what I'm predicting or what I'm looking at, but yes, we have increased our rates slightly in this financial year where the ad is concerned. We have again taken looking at different ways of approaching various corporates for them to come and advertise. We are also looking at various ways of filling up our seats, and that's something which hopefully we'll be able to talk about soon. That how do people come and watch movies at Inox on a regular interval and a regular basis, and see to it that our occupancy levels keep on going up. So that's something which we are working on.
All right. How well is the Insignia format working for you, Mr. Tandon? Competition is also lining up similar formatted screens.
Insignia has always done well since we launched this brand. Whether it's in any of our properties where we launch Insignia, it's done well. Our new formats also, like Kiddles, is doing amazingly well. So people are coming and asking for, the kids are coming and asking for tickets in Kiddles. The MX40 has taken off to a great start. The occupancy levels are very high. And so is the one with LED screen. So we are happy with the investments in these properties. IMAX has always continued to do well. Going forward, we will be having a few more formats and technologies in Inox. We've signed a deal with ScreenX, where we will have projection on the side walls too, apart from the main screen. And so we are looking at some exciting new formats and new technologies.
All right, interesting. Are you also looking to diversify into more regional content to reduce the heavy dependence on English and Hindi content?
Inox is a pan-India player, and we show all movies, whether it's in Hindi, English, or any other Indian language. We have got good presence down south. We have got a good number of multiplexes in West Bengal. So, and we show all movies in all Indian languages, and that has been the trend since day one. So I wouldn't say that our dependence is only on Hindi cinema. It's we show what the patron requires in that particular place where he is, and we show all possible languages in which films are made.
All right, Mr. Tandon, just one final question. If you could leave us with some operational goals for FY20.
Well, to improve our operational metrics further, to ensure that we are able to, as we delivered all our promises in FY19, we do that in FY20, and ensure that we open 80 screens, which we are talking about in this coming financial year.